Welcome back, guys, to another trading video with me, Oscar. Today we're going to talk about a trade I made yesterday, so a trade review, but we're also going to talk about somewhat of what I see coming up in the next few weeks, how I'm going to develop, and how I'm going to push through this little dip I have in my mentality and in my journey as of right now. So if we get into the trade first off, I traded SNES yesterday. I traded it as overextended gap up. So stock that's way overextended and that's gapping up the next day. And that was exactly what SNES did. This is a trading setup that I'm feeling more and more comfortable with. So I actually took this trade with my real capital. I'm getting into more why this is good and potentially bad for me and my development as of right now. We can get into that as of right now. Why I think this might have been a good decision to take is because I have to start filling out the real capital trading feelings with adrenaline rushing, all that stuff. Sure, you get it somewhat with paper money if you're really good at thinking of it as of real money, but it's something totally different with real capital. The second part and why I think this is somewhat of a bad idea that I took this trade yesterday is because I said in previous videos, and I've said to myself, that I should promise myself to not trade any setups that I haven't tracked with more than X amount of copies so that I have a statistical edge. This turned out to be a very good reminder of why I should keep on tracking stocks and not trading until I truly understand a pattern. Because I ended up taking a loss. I entered at 170 and I exited 183. So real quick, let's see, it's a 7% loss. I did take a really small position though, and as always, guys, you have to keep track of your your trades. So I'm totally down off the commissions around $100. So yeah, it sucks, but it's not the end of the world. This can be flipped in one trade as I get more comfortable, so I'm not totally like demolished about this trade. But some key lessons that we can take off from this, because as always, guys, a lost trade is only a loss, like mental loss as well, if you don't learn anything from it. But I've been really good at learning stuff from my losses. So what can we learn from this loss? There are like two main points, or three main points maybe. I've done a physical checklist that I'm always have on my desk so that I am forced to fill it in. Which has helped me a lot with this last trade, or these last trades that I've made. I'll put it up on the screen so that you get a feel for what I'm looking for. Just give me 1 sec and I'll find it for you. But what it basically is that it's forcing me to be meticulous. So it forces me to check out the SEC filings. So SEC filings, I want to see how many shares outstanding. I want to see if the company is bleeding cash, to see if they're potentially going to do a finance. I want to see if they're warrants, etc., etc. You see on the screen, it's very basic stuff, but it's really core stuff that you have to be intact with to make a good decision. So as I check this in pre-market, even you can check it as the market over. Of course, you have to be prepared. I saw that, okay, it was warrants. There was like 5.5 million warrants at 1.5. So $1.5, and I don't think it's a coincidence that the stock stuffed several times in this area. So my first thinking process, or my first idea that snapped or that came to me, was that okay, I should probably short some in here because it's getting stuffed all the time. But I'm also aware of that pre-market trading is really sketchy because the stock can pretend to be weak. As you can see, it's still up a lot. If we pull up the day before, like after hours, it grinded up very like it grinded up at least, I don't know, 10% maybe. So it was up a lot. Uh, I don't mean that this was weak, but as it stuffed several times, it was somewhat of a trap for the shorts, especially those who had watched and looked into the warrants. And I'm not so experienced, but I've seen before at least that stocks can twist so fast in pre-market trading. Therefore, I was a bit more careful. So I didn't take my real position in here. I played some paper money, and then I just cut it as it broke above 150 or 160. But my real entries and exits was up here. Due to the fact that within the big picture of overextended gap ups, there are mainly two patterns. One pattern where it's pushing up and it stuffs and it has a big drop. Let me just pull up some pictures. This is going to be a picture showing recap. So top action. So there are mainly, at least in my opinion, two patterns within this pattern. So we either have this quick push and this big drop, and potentially a big rebound. We have this somewhat gradual push, and then a drop, and then a small bounce, and then a big drop. So big push, big drop. Big push, big drop, small bounce. So this is a really good example. So it has a gradual up push, and then has a small drop and a small hold. So it holds up, and then it's a big drop. So that was my thinking process with this pattern or this price action that SNET had. And therefore, as it bounced up here, it stuffed like 2 times, and then I said, oh shoot, I gotta miss this. So I put in a limit order to short at 170, and it did rebound. I was super happy that I filled into strength. Plus points for me there. Did a good job of filling into strength, being on the right side of the mentality of shorting. So let's say I shorted in here. As you can see, I have the right entries and exits. So 942. So yeah, I shorted in here. And it would be great if we can draw a line. Yeah, short it up here. Then I want to set a key resistance area as my risk. So what's more key than a higher day break? And especially on a stock that's been up so much and have trapped so many shorts, you can just imagine it's going to squeeze a lot, or that's at least my thinking. So I had my stop up here, or my mental stop, of course. I used limit orders. So I stopped up at 83, maybe something like that. Did a fat finger mistake, pressed buy instead of cover. So delayed some seconds, but yeah. So that's the overall trade. And I think actually this is a trade that I'm going to, or that I'm willing to take once more. So let's say this scenario comes around again. I probably would have been playing this the same way. But something that we should talk about, or something that that I'm seeing, or I'm seeing it with two examples. So I'll start with major volume, like SNS, SNES, like it's major volume, it's outrageous, and that's up a lot. And we have another example, GERM. The main thing that I see, as with this overextended gap ups, is that they tend to have fake outs, just as SNSE, SNES, as well as GERM. Oh, really? Nice. Yeah. So what I wanna say about with this is simply that I have to do some more tracking and to get a better feel of what patterns there is within the pattern, so to say. The third thing I want to talk about, or the second thing, I don't really have track of how many things I've been talking about, but also, as I said, I would have taken this again, but probably in the future I'm going to cut it quicker, because as if we had looked into the pictures, you'll see that those who hold up and then crack, they do just that. So they hold up and then they crack, like not immediately, but they crack. They don't have a higher high. They don't have a higher test from the previous. So in the future, I'm probably going to cut these trades faster, because then I have a better feel for what's normal and what I can expect from the trade. So a lesson right there is to have a better feeling for how the trade should play out and cut it as it doesn't do that. So main lessons is probably from this trade and how I'm going to push through these couple of weeks is that I'm going to focus in more on paper trading once again, because I'm not feeling comfortable enough with the patterns as of right now. I haven't done tracking, so that I don't have any statistics to lay back on, so I'm not super comfortable as of right now. So I'll be paper trading to get a bit more feel for stuff like, okay, when is the trade not going the way that I planned, things like that. So in a couple of weeks, I'm probably going to paper trade more. I'm going to do my best, or I'm promising myself that I'm not going to trade with real capital until I have tracked at least what I said, 60 examples of the setup. So yeah, quick recap, and I just gotta remind myself to keep on fighting. I'm in a bit of a dip in my journey as of right now. Not as fun, of course, but yeah, I just have to keep pushing myself forward, and remembered myself that the average person would be giving up as of right now. So I have to push through to become better, faster, stronger, smarter, you know. So yeah, thanks guys. Hopefully you learned something. Hopefully this is going to be helpful for you in the future. Peace.